All right, today we're talking about the 5 tips to becoming a better day trader and how to avoid them.
And really, like,
Sorry. That's so wrong. Everything was wrong about tips to becoming a Let's try that. So today we're talking about the 5 tips.
Just a tip.
If I can't make it through the title, I can't make it through the whole damn thing.
What's up, everybody? Brad here, Fat Man Zoom there, and we got
What's up, guys?
We got another great community topic, and this one was actually encouraged by our folks over the Chaos Crew. Fat Man Zoom, what is it that we're talking about today?
All right, so today's topic is the 5 tips to becoming a better trader and mistakes to avoid. Yeah. So we're going to give you 5 things that have gotten brought up, which, you know, you've been help to me as far as trading's been concerned. And I've noticed that a lot of things that I came to you and talked about and you talking me off the ledge, we're experiencing in our community or people just coming into our channel. So I've compiled 5 sort of core philosophies that you've brought up throughout, and I wanted to get your feedback on it.
Okay.
All right.
Shoot 'em.
So the first one, and these are I prioritize these. So I think this one is the most important one.
Okay.
Having a plan. I think having a plan is the foundation to everything else. And you bring it up a lot when you're talking about people having a strategy. So to me, that is number 1.
Yeah, I think so too. I mean, I'm sure we're going to go over a lot of really important topics, but this one is numero uno because everything starts with the plan. And I think one of the biggest common mistakes that end up happening is that you create this plan, and what happens? Mike Tyson comes in and hits you in the mouth, and then you don't know what to do after that. So just having a plan and not being quick to deviate if it doesn't go your way is going to be super crucial.
Yeah, and one of the things you bring up is, I think when you're telling people not to chase things, and I think when you don't have a plan, that's when you can get in trouble.
Yeah.
You can start chasing things. You can start trying to ride a wave if there's a meme stock or whatever it is. That's the one thing I hear you talking about a lot. And the other thing is, guys, have an exit strategy. Part of the strategy is not just getting in, but how you're getting out. So that's the big thing. All right, so the number 2 tip, I think, is tied to the first one, if you don't have the first one, which is managing emotions. And managing emotions, I think we could do a whole video on it because there's so much to it.
Oh my God, yeah.
But really, we've seen this is where people get in trouble. Just in trading in general is when the emotions come into play. So I think that is one of the things that's important, is to learn how to manage your emotions.
Yeah, one of the most common terms used in the stock market is FOMO. It's fear of missing out. And people love chasing things because they're afraid they're going to miss the big run, when in reality, most of the times the big run's already happened and you're already too late. Once you see people talking about it on Twitter, Reddit, whatever, you're already too late on it. And for most cases, you know, we've talked about stocks that we believe in, even though they've ran, we think they can go more. And that's a much different scenario than, like, you know, a meme stock that's gone up 100% in a couple hours versus one that's gone up 100% in a couple months. So I think that that's definitely key. Just keeping the emotions in check is really important, to really also just sticking to the plan, going back to the main topic.
Yeah. And we recommend this for especially new traders, but we're swing trading. Yeah. So it's very rare that we necessarily need to do anything in the moment. Right. So a lot of this stuff needs to be done when the market's closed. And so when you're thinking about what you want to do with something, anything in life, it's just good practice to not do anything with emotion, and it's going to be okay. So even if you have to wait a couple hours or even a day to make a decision, I would implore you, if you're feeling emotional, to just wait and just take a deep breath, because it is that FOMO that happens. The other thing with the emotional things we see is recency theory, where something has went off and you're just trying to, again, you talk about chasing, something went off and everybody's excited. And so it's the latest, greatest thing that they're trying to jump on board, and you're getting in because you want to get that excitement. And I think the biggest thing is confirmation bias. We talk about the fact that, you know, you always need to understand the upside and the downside. And if you can't find a negative or a worst case scenario, then you really haven't tried hard enough. Right. And that's the thing with confirmation bias, is it's easy for us to fall in love with the stock and we find the information that we want to find, not okay, well, what's the worst case scenario? What's the negative to this? And so looking at both sides, trying to avoid that confirmation bias.
There's the other side of this too, and that is, the time that we're going in right now, everybody's losing their mind over yield rates and thinking that there's a market crash happening when really we had one day that the NASDAQ fell into the correction territory, not even a crash, and people are losing their minds. And so, I think just really coming to the understanding that not just living in the minute-to-minute basis, but looking a little bit more of a bigger picture and from 30,000 feet up, it's definitely going to help you out.
Tip number 3 is this is the own the chaos thing we created, which is buy in the red zone.
Yeah,
buy in the red zone is, I think, the biggest lesson that we can give people. But it hurts the most.
Yes, it's very painful to buy in the red. But, we always talk about this. It's a saying. I don't know who came up with it. You buy in the weakness and you sell in the strength. And people always seem to want to do the opposite. And, all of these topics that we're talking about just kind of tie in together with the emotion and having the plan. I love the fact that we created a list like this because it all just intermingles. But, that's really what it comes down to, is just buying into that weakness. Now, I think it's really important to make sure that we're not just catching falling knives. Lucid went crazy and then people bought it, because it went down $5, but it still had lots of room to fall down. So making sure that you have an understanding of when the bottom actually comes in, of course, makes a lot of sense. By that same token, we don't want to also time the market. So there is a delicate way in which it makes sense to average in. And we've talked about this, taking portions of position sizes that you want to make in a particular stock and just adding to them a little bit at a time.
Yeah, and for you guys that don't know the saying red zone is a football term. A football field is 100 yards. And the most important part of the field is the last 20 yards. So the last 20 yards is considered the red zone. And it's arguably, it's the hardest yards to get. Yeah. And so if you can capitalize in the red zone, you're going to see success in football. And the same thing with trading. When it's red, that's the hardest part. Yeah. Like it's hard when you've got a stock that's down 3%, but you're like, the stock is worth more than this.
Absolutely.
Or it's down 20% for the past 2 weeks. Your ability to be able to still buy in the red zone and punch it in, that's going to basically yield rewards for you. Now, I must say, we've also bought things at 52-week highs, but really the difference makers are the red days where everything's red and okay, here's my high conviction stocks. Let me get after it. Let me buy the good stuff. That I think is a difference maker for a lot.
Yeah, absolutely. And just to kind of talk about the 52-week highs, we don't buy everything up at the top. But when we see things that still have room to run, we'll definitely actively trade that. But I think also knowing when to take profit is important, and it doesn't really apply to the red zone because you're supposed to be green at that point. But I also wanted to just kind of hammer home that, understanding that you should probably take profit when you have the ability to do so, and at least get out what you put into it. Depending on what you're in.
Tip number 4 is trust your due diligence. I couldn't leave due diligence off of this, and I want you in a second to give resources for people or resources that you use. One of the most common things with our channel and with our questions that we harp on is giving us context. And a lot of people just throw out like, hey, what do you think about this? Or, hey, tell me about this. If you're not gathering your own information, if you're not doing your own work, why are you trusting anybody outside? So this is going to tie to the last one, but pick a few key resources that you trust. Hopefully one of them is on the chaos. But no, find some things you trust, some news sites, outlets you trust, because there's a lot of information and you need to narrow down which ones you believe in. And then do your due diligence. Put the work in. Don't just blindly trust Fat Man Zoom and B Smith because that's what we said. Like, make sure you're believing the stuff behind it. So.
And don't do that with anybody. I mean, we were just talking 60% of hedge funds don't outperform the market. And that's an crazy number. And those people are getting paid to invest. And so even the quote unquote experts don't always get it right. And so it's really important to make sure that you're taking responsibility for your own actions.
All right. And number 5.
Real quick.
You're going to,
You want me to give you the resources that you asked me to give?
Shit. Yeah. Go ahead.
You should just leave that in there. No, as far as resources are concerned, Yahoo Finance is one I usually always go to. And there where you search your specific tickers, they'll have balance sheets and all that good stuff. SEC filings are really important to make sure that, the stock that you're getting into isn't susceptible to a lot of dilution and that sort of thing. That's a really crucial part of the due diligence, and just kind of forward-thinking outlooks and that sort of thing. Yahoo Finance is really a good one. CNBC, I know that you use.
Yeah.
But really any of those major media outlets, the key is just making sure you know how to use those resources. And again, just knowing how to read those filings are really important.
And most of the brokerages that they will have a news aggregator.
Yeah.
Like TD Ameritrade has a great one. Webull has a great one.
Yeah.
So I think you'll find good stuff there as well.
Yep.
And number 5.
Real quick, before we get to number 5. Before we get to number 5.
Again?
Yeah.
You're doing this shit on purpose.
No, I'm not. I just want to extend an invitation. An invitation to, I feel like I'm at church. An invitation to the Chaos Crew.
Lord.
This video was created because of our Chaos Crew. So if you guys are curious about what it is, it's actually a daily watch list that we put out every single day for our people who follow us. You can sign up by going to ownthechaos.com. It's actually free for a watch list. We provide a more in-depth one for our paid folks. It's only $4.99 a month. It actually helps support the channel and support this studio that we just got, which is pretty awesome. And we also provide our portfolios. We have Discord groups, all that stuff you can find at ownthechaos.com. Link will be in the description, so make sure you guys check that out.
And the stocks will rise up and strike down on thee with, what is that?
I don't know. By the way, we do low-key crush it, just saying.
Number 5. Silence the noise.
Yes.
This may seem simple and you may be frustrated because maybe this doesn't seem like a good nugget, but I'm telling you, it happens every time somebody starts trading. People around you find out that you're trading and they want to tell you every stock that you should buy. They haven't done any due diligence and they just heard about it through social media or whatever, the latest, greatest stock. Silence the noise. You have your resources, you have your plan, you have your due diligence, you have everything you need.
Yeah.
I'm not saying you can't take recommendations, but more often than not, all the stuff around you is going to try to get you off that plan we talked about at the beginning. And I think it's not talked about enough is once you start trading, then everybody's got their opinions on what you need to trade
100%.
And you need to silence the noise.
Yeah, absolutely. I mean, especially when you're just starting getting into trading. I mean, I remember when I got in, it was like I was reading every book. I was following every media outlet to try to figure out where I make my next move. And really, there's certain things you can, I'm not saying that you can't do that, but like totally basing your investing strategy on everything that you're listening to in the outside and not just coming up with a plan and everything that we've talked about before this, coming up with all of that on your own. The final decisions, I want to say, you definitely leverage those resources to like help you along, but that shouldn't be your deciding factor. And we talk about this all the time with like charts, not using any one indicator to make your buying and selling decisions because they all should be used together. The ones that you're using should be used together to help you with a decision, but not actually make the final decision for you.
I mean, I've talked about this before is like one of the hardest things for me. For us being on the channel, we've got to put ourselves out there.
Yeah.
And it's not just about what to buy. It's when you buy something and somebody tells you you're crazy.
Right.
I think Drive Shack might be one of the best examples. And right now, Drive Shack's an example, Rocket's an example, and I firmly believe Clover is going to be an example of a stock that people were not buying. They just were not buying, and it was hard to stay with it because of everybody else
telling us how nuts we were.
Wrong.
Honestly, it almost feels like that's a strong indicator of a buy when everybody tells us how nuts we are for buying some POS. But really, like really the pieces of shit stocks are the ones that everybody else is chasing. And really the ones that, not a lot of people are talking about, but have really good fundamentals and they're really good companies. Those are the ones to go after.
Yeah, so there you guys have it. Revisit these 5 often, guys. These are 5 tips. Maybe we'll come out with some more, but revisit these often, especially the plan and your strategy. But comment on us. What's the one tip that you wish somebody had told you when you started day trading? One thing that you think would have had the greatest impact, throw that in the comments.
Leave it down below. That's going to do it for us, guys. Thanks so much for hanging out, watching this video. Hit the thumbs up, subscribe if you're not already, and we'll catch you guys in the next one. See ya.
Bye.
All right.